As Nigerians await the confirmation of the nation's substantive CBN governor, the bank confronts pressing challenges in Nigeria's economic landscape that demand immediate attention. These challenges include the critical imperative to restore confidence in the forex market, rectify financial system inefficiencies, and mitigate concentration risks within the banking sector. A multitude of responsibilities await the incoming leadership as citizens eagerly anticipate the stability and growth of the nation's economy. This morning with me is Dr. Muda Yusuf, CEO, Center for the Promotion of Private Enterprise, and he is joining me from Lagos, Nigeria. Thank you so much, Doctor, for joining us.
Thank you very much for having me. Good morning.
Good morning to you, sir. Now, Nigeria's economy needs fixing, and we all agree to that, coupled with the slew of reform and the impacts they having on the nation. Now, what is the most pressing issue that you think the substantive governor must address, looking at the fact that these are daunting challenges that need a quick address?
Well, the most daunting, as everyone will agree, is the confidence crisis that we have in the foreign exchange market. The economy is highly sensitive to developments in the foreign exchange market, particularly the exchange rate. And that has been creating a whole lot of anxiety, worries, fears about the future of the economy, and also the well-being of the citizens, as well as the sustainability of businesses. Now, as we speak, the official rate, of course, may be around 770, but the parallel market rate is currently crossing the 1,000 naira mark. This is, of course, very, very disturbing, given the sensitivity of the economy and the sensitivity of general price level to inflation. To the exchange rate. So the first thing that needs to happen is to see how we can restore confidence in the foreign exchange market. Of course, the CBN alone cannot do this, but the CBN has a critical role to play, especially from a policy perspective. So restoring confidence in the foreign exchange market is very key. It's very key to the attraction of investment. The president has been going around the world trying to market the country, telling them Nigeria is a very good destination for investment. But these macroeconomic issues needs to be tackled for us to be able to consummate all those marketing efforts that the president is undertaking.
Well, 770 naira at the official rate, and it appreciated a bit to about 993 naira to a dollar on the black market. But then if we are to do an evaluation of the several efforts that this current administration has put in place to address the depreciation of the naira since its inception and what needs to be done now, I'd like you to break it down. What are the drastic measures you expect this substantive governor to begin to put in place? Of course, with its economic team coming together to think about areas that they need to deal with, because, of course, it would not all go well if we have failings in terms of what they do and the impact it would have on its economy. So I'd like you to just do a bit of breakdown of what needs to be done to tackle the fall of the naira.
Well, let me say up front that it's not going to be easy, because at the heart of all of this is the collapse of confidence. Before now, we had thought that we had a much better reserves in terms of the amounts we have in our reserves. Because all along, we have been told that we have over $33 billion in reserves. And you need the reserves to be able to stabilize the exchange rate. In 2022, the CBN intervened in the foreign exchange market with $17 billion altogether, which was an average of about $1.4 billion per month. Right now, I'm not sure that we're able to do even up to $500 million per month, the way things are. So is quite a very challenging situation. So as to what can be done, yes, first, we need to clear the backlog because you have a huge backlog of close to $10 billion. The Minister of Finance was talking about $6.8 billion or so. But whatever it is, that's really a huge number. And unless we're able to clear the backlog, it will be difficult to restore confidence in the system. It will be difficult to attract more inflows into the economy. So we need to prioritize the clearing of backlog, of FX. There's also the need to also ensure that we boost our capacity to generate more foreign exchange. And the low-hanging fruit here is first, the remittances. We need to clear all the obstacles to remittances. Right now, we are seeing a divergence in the exchange rate. Initially, we had a temporary convergence at the start of this administration, but as a result of the speculative activities, we are beginning to see a huge divergence now in the exchange rate, which is, of course, of concern. And because of that, we cannot afford to impose the I&E window rate on any remittances that is coming to the country. Therefore, we need to create an autonomous window which shall be free of all encumbrances, which shall be able to trade freely at whatever the market rate is. Because if we insist that all remittances should come in at 770, then you'll be suppressing the market and you'll be obstructing those remittances to come in. So we should encourage and make it as free as possible for the remittances to come in. Then, of course, we can look at what we can do in terms of leveraging assets. Whatever assets we have that we think can attract the interest of investors by way of either selling some of the shares or, selling them outrightly. If that will not do any serious damage to the economy, then we can do so. So we can leverage our assets to be able to generate some liquidity in the foreign exchange. And the last resort, of course, is for us to approach the IMF, for a bailout, to bail us out of this situation because the situation is really quite tight. If you look at all the outstanding letters of credit that we have not been able to fulfill, if you look at all the forward sales, if you look at the fact that there has been a lot of borrowing, if you look at the currency swap that has taken place before now, all of these things have severely encumbered the reserves and therefore limited the capacity of the central bank to intervene in the market. Then, of course, the government needs to intensify its efforts on this oil theft to ensure that at least we're able to capture some value, from the high oil price that we are experiencing now. If we're able to at least to meet our OPEC quota, that will also go a long way, to boost our external sector liquidity.
All right, so, Doctor, one thing that actually bothers me is the issue of having to clear backlogs of unremitted funds. And of course, we also have the issue of debt burden, which is about 87 trillion naira thereabouts. We'll also have issues of inflationary pressures with inflation rate at 25.8%, coupled with soaring energy costs. Now, these are challenges that are there, they are visible. But then when it comes to paying off these debts and freeing up the debt portfolio, as it says, the question that would always come to mind is, where would the funds come from? I understand the fact that you mentioned the issue of seeing how to increase oil production, which is a major or a mainstay when it comes to revenue accruals to the government. But then you also saying we needing to go to the IMF to see how we can get a bailout that would further encumber the finances of governments within a space whereby we have a dwindling revenue coming into government. So it's a choky situation. But then we have to be very critical and to be very honest when it comes to dealing with where the funds will come in and how to channel the funds to ease up the economic pressure on the country. How do we deal with this, to be honest?
There are two main issues. There is the external sector liquidity, Then there are also domestic challenges around the management of our fiscal operations. With respect to the domestic fiscal operations, I think that is still fairly under some level of control because we are dealing with local currency, and the bulk of these debts that you talk about are also in local currency. So between the finance ministry and the central bank, something can be worked out in a way to manage, those local variables that, has to do with our debt. It's very easy, to manipulate a few things, to restructure the debt, to increase the tenor and all of that through all the government securities, like the treasury bills, like government bonds, and all other instruments that government uses to manage its fiscal operations, And of course, servicing the debt, the government can also, raise some more money domestically. But the point I'm making is that managing the domestic fiscal conditions is a bit easier. It's not as if it's easy, but it's a bit easier. And from what we have seen some improvements even in the revenue generation of government arising from some of these reforms, particularly the fuel subsidy removal or reduction and the forex convergence. That has also boosted revenue. So with respect to what we call fiscal consolidation, some progress has been made in that space, which may help put us in a fairly good position to manage the debt. Of course, I must agree, the debt is huge because we have seen a jump of over 70% as a result of the securitization of the ways and means. It's going to be challenging. But again, some progress is being made around the improvement in revenue. The bigger challenge is the external sector liquidity, which has to do with the foreign exchange. So that is why I was saying that one of the ways we can deal with that in the short term is the IMF. If you have the IMF bailout, it has a way of giving a breather to countries generally, because the whole idea of having the IMF is to be able to meet your short-term liquidity. If you're able to make a good case, they can give a breather in terms of liquidity. And once you have that liquidity that we stretch for fairly a good time, that will put us in a position where we're able to, create some level of confidence in the system. Because what has aggravated the situation is the collapse of confidence. People are making demand for forex, not because they want to import anything or they have businesses they are doing, but because there's a loss of confidence in the naira. So that is what has created this challenge. Otherwise, the situation wouldn't have been as bad as it is. So once we have that kind of liquidity supported by the IMF or from leveraging some of our assets, we'll be able to restore the confidence and the situation will gradually normalize. So that's my expectation.
Let's now look at the banking system and, of course, the business environment in total. Now, banking system credit to the private sector in Nigeria as 2022 was pegged at 20.6% of the nation's gross domestic product, as sub-Saharan average of 28% and global average of 145% were recorded. Now, some small businesses, which account for an estimated 50% of the GDP, have just about 1% access of banking credits. So in an unpredictable economy experiencing internal and external shocks, as you have mentioned, would you still advocate for an increase in credit facility to the private sector and, of course, these small-scale businesses?
Well, credit is still a challenge, irrespective of the current, challenges that we are faced with in the economy. Credit is still a challenge. Even as bad as things are, there are still opportunities for businesses to be done. And for you to do any business, you need capital. Financing gap at the SME space is over 600 billion. That's a financing gap, according to a study by PricewaterhouseCoopers. So there's a huge financing gap that exists in the SME space. And the SMEs are very critical to the economy. They are critical to job creation. They are critical to economic inclusion, and they contribute significantly to the GDP. So if that segment of the economy is starved of credit, that is also not good for the outlook for investment growth and economic growth and job creation. So we need to see how we can reduce that gap. It is that huge financing gap that is leading many of the SMEs to be approaching all these loan sharks that are exploiting them and, imposing very prohibitive interest rates on them. Some of them are paying as high as 5%, 7% per month on the credit they take, on the loans they take from all these loan sharks. So we need to moderate that so that even the limited opportunities that exist for people to do business, they're able to do it with cheaper capital. That is why it is important. The fact that you have challenges does not mean that the economy will come to a stop or businesses will come to a stop completely. No, there are still opportunities to do business. What the biggest shock is those businesses that are foreign exchange related. Those are the ones that are having the biggest challenge as we speak. And the purpose of a bank is to support the economy. Now, if credit to private sector as a percentage of GDP is 20%, the sub-Saharan average is 28%. The global average is about 145%. So you can see that we have a lot of ground to cover. And the banks exist for purposes, primarily for purposes of what we call financial intermediation. That is mobilizing funds from the surplus end of the economy to the deficit end of the economy. That is the way a banking system can bring value to the economy. Not a situation where the banks will be making more money from non-lending or non-core banking transactions, making money from commissions, from fees, from FX and all of that. That is not bringing value to the economy. So we need to rechannel that to ensure that there is better connection between the banking system and the investing community. So that is the whole essence of that. And that, I think, is part of the reforms that the new CBN team should be looking at in terms of repositioning the banking system to support the economy.
So does this summation of repositioning the banking system now corroborates the calls for a review of the minimum capital requirements of the banking industry, most especially in the light of considerable loss and loss in value, of course, of the naira and depreciating domestic currency, including the constraints that you have mentioned affecting the financial sector?
Yes. The capitalization is key, because you need a strong capital base to support the exposure of a bank. If a bank is carrying a liability that the capital base cannot support, that is a risk, to the bank and a risk also to the financial system. So it is very important that we ensure that the banks have the capital base to support the financial transaction and to support the liabilities to which they are exposed. So that is very important. We had a capital base of 25 billion in 2004 when we had the banking consolidation. At that time, 25 billion was an equivalent of about $187 million. Today, the same 25 billion, which is still what the law is now, what the regulation is as minimum capital, is just about $32 million. So you can see how massively the capital base has been eroded. So if you have that kind of situation, there's a need to quickly ensure that the banks are recapitalized. Some on their own have already recapitalized. They have very huge capital base. But any capital base that is less than maybe 100 billion now, maybe putting the whole system or the bank itself at risk. So there's a need in order to strengthen the banking system and ensure that we have financial stability to quickly address the issue of the capital base in the light of the massive erosion of value of the initial minimum capital base that we had.
Let's quickly look at another constraint, Doctor. The tenure of funds in the banking system is extremely short, with over 85% of deposits having less than 1 year tenure. So, does this bother you in any way? And if so, what do you think the central bank can do in this regards?
Well, it's something to worry about because what we have seen over the years is a very serious or profound mismatch between the assets, that's the deposits that the banks have, and the kind of lending that they are doing. Cumulatively, at least as at 2 years ago, we had a negative mismatch of close to 40 trillion naira. In other words, where the lending that we are given has a bigger tenor or longer tenor than the deposits that are available. That is also not good for banking system stability. That means that you are doing business with short-term funds and funding longer-term or longer tenured projects or businesses. That is not good. So we need to look at how we can improve the tenor of funds in the banking system. If you have a situation where the funds in the banking system, almost 90% or so, is less than 1 year tenor, what can you do with 1 year tenor funds, apart from maybe working capital or buying and selling? The critical things you need to drive economic growth, like manufacturing, some investment and all of that, you need close to 5 years gestation period for such things. So the banking system cannot provide that kind of funding. Then what kind of banking system do we have? And we cannot offload all these responsibilities to the development finance institutions. We have seen the kind of experience we have had with all these CBN intervention funds. So we need to also again reposition the banking system. Of course, this also has to do with the macroeconomic environment to ensure that we have a pool of funds of longer tenure within the banking system, so that the mismatch, the current negative mismatch in the assets and liabilities will be drastically reduced. Otherwise, if we continue to have it this way, it poses a risk, to the banking system itself. We continue to have a serious mismatch between the deposits and the lending in terms of tenor. That is not good for the banking system, and it's also not good for the financial system.
Okay, Doctor, let's wrap up this way. Economists say that deepening the financial system entails the mobilization of financial resources from the surplus end of the economy to the deficit segment of the economy. So I'd like to find out from you, which sectors of the economies are these, and how possible would that be in terms of finding a financial balance for Nigeria's, of course, financial system. And I'd like to tie that to the turnaround time that we should be expecting when we are measuring the success of this new team of the Central Bank of Nigeria.
Well, generally, in an economy, there are funds. Funds come from all manner of places. Even as bad as things are, there are people or segments of the economy that are able to generate some surplus funds. We have savings in deposits, we have savings in fixed deposits, people are investing in government bonds, and so on and so forth. And if you look at even, again, just to give you an idea of the amount of funds in the system, in 2022, total electronic transfers in the Nigerian banking system or Nigerian financial system was about 1,550 trillion naira. I'm not saying billion, trillion naira. That is the volume of e-payment transactions. That's to give you an indication that there's money in this system.
All right. Dr. Muda Yusuf, CEO, Center
so what
for...
is important?
Doctor, all right. So thank you so much, because that's about the much we will take on this particular segment of the show. I'm Dr. Muda Yusuf, CEO, Center for Promotion of Private Enterprises. Thank you so much for talking to us.